Welcome, ladies and gentlemen. Welcome. Today is Monday, September 22nd. It is currently 9:47 p.m. FOMC, Myron speaks. Remember, Myron speaks at 12 p.m. He spoke at 12 p.m. earlier. And this was yellow news. So medium impact news. Let's see what he said. Fed Myron says policy is considerably restrictive and could slow down economic growth. Let me show you. Yo, we got hearts in the chat. Hey, let's go. Okay, so Myron says policy is considerably restrictive and could slow down economic growth, and recommends a series of 50 BPS cuts will recalibrate policy. And if you don't know, 50 BPS basis points, they cut rates. I think it was last week. Cut rates 25 BPS, so a quarter. And if anything, I feel like this is bullish. So, what would happen if we were to see Feds cut rates again, which is likely because in the past, monetary policy is not something that happens overnight. And by monetary policy, I mean what's going on with the Fed. And the Fed is cutting rates. And by cutting rates, money is borrowed at a lesser price. Money is borrowed cheaper. And what does that mean? That means that more people will be taking out loans. There's going to be more money in the market, which is bullish. Bullish being, and like I said, what we've seen in the past with monetary policy is that there would be rate cuts within like the period of September all the way to December. Consecutive rate cuts, maybe September, and then another FOMC meeting in October, and then maybe November another cut, and then December probably would be another cut. That's what happened last year. And not every year is necessarily the same. Therefore, it's really subjective. Who knows what could happen next? But let's go on the charts. Actually, before we go on the charts, let's go over and reflect what's going to be happening this week. Just reflecting with news, just to prepare. Powell speaking tomorrow. Wow, that's fascinating. Likely no trades and a sideways move. So Powell is the man. When you hear Powell speaking, there will likely be a reaction within price, within the market. So Wednesday, we have new home sales, or there is new home sales. And then Thursday, unemployment claims. Friday, PCE price index. Another week within September of consecutive news days, red folder. And what this tells me is that it furthers my conviction to say that I am not going to trade for the month of September. To trade while we have all this news going on feels as the odds are not in my favor. So, with this being understood, next week, another eventful week. But with all that being said, without further ado, let's get over to the charts. SP 500 is pushing nearly 7,000. 6693. 667 or 6752. So, man. Okay. What am I going to do? First, we're going to look over at what happened during the previous sessions. Previous sessions being over the weekend from Friday into today. Price was just moving sideways as we had seen. And then there's 9:30 market open. I'm going to mark out the 9:30 opening range. And I'm doing this by marking out the 15-minute 9:30 candle high and low. Then I'm going to move into the 5-minute time frame. What had price done? We had seen market open. Prior to market open, not too eventful, but took out recent draws to the downside, made a higher low. And this was just consolidation, moving sideways. Market open, price exits orb. And then we see sideways, but exited orb, candle closure outside of orb. Price came back in to orb and then exited. I don't want to be that guy to say, oh, I would have entered if ... because as I just told you earlier, I'm not trading for the month of September. But this does follow strategy. You don't take the first move, you wait for a retracement candle back into orb. And then you wait for a 5-minute candle closure going in the direction of the trend that you are hoping, that you have read. And we have these recent draws to the upside. Not to mention this high right here. Enter on this candle closure, targeting the opening range equilibrium, allowing us to get a tighter stop loss. Still getting in on the position. And it's only 39 ticks to right there. And what we do is likely target this high. First take profit at 1. Second take profit at 2. 2RR. This would have been a solid opportunity, but now on NQ, very similar reaction in price. Let me go through, rep it, and then can recap the perfect trader. So why did I not show up to market open today? Well, guess what? I was moving. I I was moving apartments, and then I had scheduled it right at market open, so I had to make the sacrifice. NQ broke 25,000. I'm thinking tomorrow price is going to push even higher. If you have the Fed speaking, and if what he says is bullish, I'm thinking you're getting a surge to the upside for even higher highs. So go to the 5-minute time frame. Okay, now NQ would have been an optimal entry. We look at the entry prior, and it was not as distinct as this entry right here. So as I had said, we do not take the first move out. You wait for a retracement back into this opening range before entering for price to push higher. So exit orb upon 950, enter back into orb, price exits, mark out equilibrium of orb, and enter on the candle closure on the bullish candle closure outside of orb, targeting first take profit as 1 risk to reward, and then the next one being 2 risk to reward. And since there are no previous draws on liquidity to the upside, this would be one where I would just put 2 RR on the more conservative side, because price is still at 24,873, not necessarily at a point of where it is now, but based on what I know, that's what I would have done. So today was a solid day of price action. But I say that only looking back on charts. I didn't experience it, so it's hard to tell. I really felt like I needed to film this, although I got back from jiu-jitsu. Moved the stuff earlier, and then long story short, we had some technical difficulties. I ended up having to just drop off the U-Haul and not move all of the stuff, or else I'd be in a different scene. I'd be at the other apartment. But parking issues had to delay. Then got back, jiu-jitsu, got back here, and this is where we are at now. But committed to the game, gotta provide market recap. So we have the real trader, 9/22/2025. No trade. Moving. Oh, no, let's look at this. ES and NQ both pushing all-time highs. Pushing strong all-time highs. Now, if you're familiar with TJR's strategy, that is a strategy that I started out with. And if you're not familiar, TJR's strategy that he teaches is a liquidity sweep, break of structure, fair value gap. Enter. What this is opening range breakout. The difference is that this is slightly more systematic. That's how I would put it. A little bit more simple. Now, the strategy that I'm currently using, this opening range breakout, like I said, mark out the 15-minute 9:30 candle, high and low of that candle. Then wait for price to exit. Wait for price to exit, candle closure out. Wait for price to retrace back into opening range and then push higher. Enter on a candle closure out with prior order flow being towards the direction of the trend, of the higher trend. And I don't have volume up right now, but you would hope, and as I would mark out on the other charts, to see an increase in volume to the upside, increase in green volume to the upside, confirming that price is strong in that area and not decreasing in volume and the opposite trend, whereas that might show price might not continue higher. But with the looks of this, the strength of these candle closures, it's not as though the candle is, how could I explain this, leaving a further trail down. It looks as though we're just moving higher, or price is just moving higher. Now, the TJR strategy, it looks very simple, but on paper, the execution is slightly different. But in that, it can be very similar. So, what you're waiting for is a liquidity sweep. And what a liquidity sweep is when price is making higher highs, higher lows, or lower lows, lower highs. And then suddenly, upon it could be an equal or relatively equal candle closure, such as this one, and price breaks structure to the downside. By breaking structure, I mean closing below the most recent low. Once we see price closes below the most recent low, that tells us that the current trend has changed and price is no longer pushing to this direction. Now, as I mentioned, liquidity sweep, break of structure. From there, you're looking for some sort of retracement. What is a retracement? A retracement is when price, as I mentioned about orb, comes back into that price range. For example, price is over here, 24,872. Enters back into opening range of 24,856. This tells me that we have retraced back into orb. And then, even from TJR strategy, very similar is a 5-minute candle closure outside of that direction, telling you that we have changed or we are following the higher time frame. For example, by higher time frame, I mean what looks to be a retracement on the 5-minute time frame might not exist on the 15-minute time frame, or it might be even smaller. It might just be a bigger candle, or it might be a smaller candle. As you can see here, when we get down to the lower time frames, the candles can stretch as accounting for their duration. Obviously, the higher time frame candle is going to contain what had happened within that period. For example, I'm marking out like 9:30, but on the 15-minute time frame, if you understand what I'm saying, I appreciate it. I think I might be stirring myself up right here, but let's move back. So enter on the 5-minute candle closure. That's what we had discussed. Now let's go back. All right. Calm little trade recap. We have Powell speaking tomorrow at 12:25, I think it was, or 12:30. So likely no trades, but I will be providing a trade recap. So I might wait for Powell to speak and then I can recap later, just as it's an anticipated event. I think that might be what I will do. That might be more effective. That is what I'm going to do. So, recap tomorrow. Let's just see what happens. I'm going to catch all boys on the next one. Let's go.